Hello, kids. Can you hear me? Can someone just let me know? I know there's not many of you viewers because this is for the top tier membership, so I know we've not got loads of people online right now. If someone could let me know, that would be good. There's really not many of you online, but if you can hear me, please let me know. Okay, we've really not got many viewers on this one. It seems a lot of you guys are student members rather than the expert members. Okay, sweet, you can hear me. Okay, I'll get cracking. Okay, so they're all coming in now. Cool. Right, so a few of you have asked me about the situation of the Fed and how it tightens and all that sort of stuff for the normal economy, and does it apply to Bitcoin? So the answer is it's beginning to, yes, because the institutions are coming into the crypto market. So when we look at an article like this, we had the Fed come out yesterday. So what you're looking for is you're looking to see, does the Fed do what the market expects? If so, the event that comes out that day or the news that comes out that day is already priced in. If it does something that's more drastic in a worse way, then the market will go down. If it does something that's much less drastic, so in this case it's the case that we know rates are going to go up, interest rates are going to go up, the cost of borrowing money is going to go up. We know that. That's been priced in, so not a problem. So the market's not going to crash on him and like re-announcing that. That's just not going to happen. But we know for a fact that they're going to bring these rates in. However, what they've started to do now, if we highlight in the article, here. So it says about the first way they're going to curb inflation is through by increasing the interest rate. What this does now is it makes the cost of borrowing money more expensive. So you're less enticed, you're less encouraged to borrow money. Basically, if you're a business or you're a big institution, you don't want to borrow more money because the cost of it has now risen. So what we're looking at now is the cost of money is going up, not a problem. We know that's the case, fine. So what we're looking at now is that there's going to be a second lever that they're going to pull to sort of help curb inflation. Now this was not expected, which is why we got the sell-off yesterday. So the second lever is that they're basically going to buy back. They're basically going to sell the treasury bonds and the mortgage-backed securities they accumulated during the coronavirus pandemic. So what they're doing is when the pandemic comes in, people are not at work, so people are basically struggling. Even though, like in the UK, we were kept propped up with the government basically stepping in and paying people's wages. But what they did in America is they basically pumped money into the stock market, and they gave each citizen like $1,200 or something like that, which is unheard of, to be honest. But what they've done is they put loads of money into the economy. So the way they put loads of money into the economy and into the stock market is they buy the treasury bonds and the mortgage-backed securities. Now what they've done is they've done that for a year. So they're printing money and they're buying these things. So that money is going into the stock market. So whoever owns those mortgage-backed securities is just getting it bought off them. They can then spend that money on other crap, basically, like other equities. They might go in other bonds. They might go in other treasuries, whatever. But in that environment, the Fed are constantly putting money into the economy. So that encourages the investors to go out and invest in riskier assets like crypto. So what you're seeing now is that they're no longer pumping money into the economy, or they are, but at a much lesser rate, with that going to be tapered, as in that's going to go down to zero, so they're not putting any money into the economy, and they've already started selling the assets that they bought during that pandemic. So that was a shock for everyone, and the market did not know this, and they were basically hinting that that was what they were going to do, and the market took that in a bad way. So a lot of the algorithms basically sort of went through the message of that and picked out the words, linked them to the negative words, and then algos turned bearish. So now what they've done turning bearish, they've forced the price down, and basically everyone's crap themselves because of this being announced much earlier than what people expected, which is why the market has gone down. So with crypto adapting to this and how does it play out, it's really interesting because asset managers, have to make money, or they have to at least manage the assets well. And with inflation at 6.77%, you need to make more than 7% in the markets that year. So it doesn't encourage a risk off appetite. It encourages them to be risk on, because they have to, if they have £1 million and they don't do anything with it, what that £1 million buys them, a year ago today was 7% less than it is today. So they know that with inflation being this high, prices are going up and their value of that money is basically decreasing. So they need to invest that money in something that's going to outpace inflation. So if inflation comes down to sort of 4%, say, in the next 9 months, they need to be earning 10% a year, or like 6-7% over that over that 6 to 9 month period. So it's weird because the Fed is taking money back out of the economy by selling the treasury bonds and the mortgage-backed securities, and then they're basically going to hold that, so there's less liquidity in the market. I'll explain the liquidity stuff when we get onto the charts as well. But so that's what they're doing. And now the funds, the asset managers, they have to find a way to make more than, probably more than 10, 12%, because they have to outdo their usual rate, plus they have the issue of the inflation. So does that suggest that they then say, well, I want to go for really risky assets like Bitcoin and crypto, or do I sit on the fence and just say, you know what, I'll lose that 3-4% over the next 6 to 9 months? It's really difficult to know what they do. I think the big boys, they'll be saying, let's go for it. Whether the answer is crypto or not is something we don't know just yet. But that's what the current environment is like, and probably why we're seeing not big boys deep dive into crypto just yet, which is showing up in the on-chain metrics. Now, I have said for a few weeks the on-chain stuff is looking pretty weak, but it's now starting to reflect in the price as well, which is why we have been in this like risk-off mode over the last, I'd say, month, even though we were loading up on the alts in this area, which they did burst. Obviously, Ethereum didn't really, but like your Litecoins did, your Chainlinks did, and your Polkadots did. We had Tezos, we had a couple of good trades that we ended up breaking even on some of them. We made profit on some of them. I think we took a couple of really small losses. So we were there or thereabouts. But let's go through the chart. So with the Fed pulling this money out of the economy, basically, or by selling their assets as well, that shows you that the investors then say, they're obviously reading this and saying like, oh crap, that's not good. The money's not even coming in anymore, but they're now actually trying to sell all the stuff they bought. So that encourages that risk-off appetite, unfortunately. But you saw when that wasn't the case, you had these big crashes, and let me zoom in. And the wick goes all the way down, as you can see. I want to show it off to the side, but it's here. So it goes all the way down, and there's bids liquidity there. So the Fed has not done these mad announcements just yet, and there's bids, there's liquidity. So people are still risking on. They're willing to buy it at these prices, which is why we closed right back up here. We've come down. Today we've got these, this sort of bit of crash over the last 3 days, and we're not making any rebounds yet. Hopefully it is here is the point you start to make some form of rebound, because we're on the daily, we're very low on the RSI. Let's check the 12-hour. Like we're at 27. We're reasonably oversold. Can you see the chart more clearly now? Sorry, I've got a couple of comments. Maybe it's the stream. You should still be able to see a significant part of the. Is everybody else the same? Can they not see the charts either? Could a couple of you let me know if you can see the charts? Like I'm on the chart now, just basically whizzing around. You can see them. I see the charts fine. Okay, sorry, Luca. I think it's just you, mate. Okay, I'll update you in the chat or something. Sorry, guys, but yeah, I'll get back to it. So we saw here there was liquidity, there was bids. People were buying it up. As you have that price crash, people are buying it up. As you're having this bought up, that shows you the risk-on appetite that's in the market, and people want to be, the asset managers have their money sat there waiting, ready to pounce, basically. Here they're not. So we're having these crashes, we're not seeing these rebounds. So that shows you the different change in climate. To be honest with you guys, what do I think with regards the, are we in a bull or bear market? At this moment in time, and I've been saying for quite a few weeks, we need to start seeing in January the big boys come back into the market and the on-chain improve. At this moment in time, it's the 7th, and we haven't seen that improve yet. And we're now starting to see it reflect in the price. We got this breakout here and this pullback here, which is why we de-risked in here, because this is not good. When you get a clean breakout of a 2-month downtrend line, about a 6-week downtrend line, you need to then trying to go for like a main orange box. The main orange box is still all the way over here with a resistance here. I mean, we've got absolutely nowhere near it. We got held down by the local orange box, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 15 or so times. So quite a lot. But yeah, that's where we're at this moment in time. I'm still in the 2K challenge, so I still hold that stuff. That's the long-term portfolio. I bought those items, those coins, because the projects are good. I'm happy to hold, so that's why we have them. With regards you're best off risking off your money now, but I do think we should have some form of bounce, really. I mean, we can go down to maybe like a 38 or something like that, but it's really difficult to know if we're in a bull or bear market now, or if we're already in a bear market. I would say we're now more in a bear market than we are in a bull market, to be honest. But it might all change. I mean, we're literally at the toing and throwing point. It can all completely change over the next week or two if you start seeing a lot of large bets being placed in this zone or even in this zone. It can really change. So it's hard for me to call it now. But what I'd say is that conditions have changed and had changed a while ago, which is why we de-risk slightly in here. But yeah, I'll go through some of the charts and you can see. But you can see here how important of a level, let me go to the daily, for Bitcoin. And just to be clear, I didn't think we'd break 40k, to be honest. We still haven't broken 40k, but I thought the on-chain would improve, and we're still not seeing the on-chain improve. So you have to work with the information you have. At this moment in time, the on-chain isn't good enough to suggest a massive rally. What we might see is like a form of like continual range-bound mode, where you have some accumulation at the lower levels, you have some profit taking at the slightly higher levels, and you've got to be picking the good alts in those rebounds, basically. Sort of like we did with Tezos, Chainlink, and we got caught out with Compound, I think. But you have to. It's hard to make money, and especially the 2K challenge. When we started the 2K, I think in here, and I mean you've gone from like here. I mean, the only time the market went up was for this few days in here. So, and I think we did make money with Chainlink and, as I said, a few of the others. So at this moment in time, it's about sitting tight, not overexposing yourself, and looking for opportunities where they come. But for now, I would say we're probably more in a bear market than a bull market, unless we start seeing some of the on-chain data improve and some of the big boys come into the market. Let's go through some of the charts. So, and because of this, I may start flipping to shorting. So the 2K challenge I'll keep. I'm happy to ride that. I don't think we go below 30k Bitcoin. And for that reason, I'm happy just to hold the alts, because I think the alts will still get some dominance. So I don't think they're going to drop I think they might do another 30% decline rather than like a 70% decline from where they are now. But I mean, this could go to here at worst ways, but we're going to have some opportunities and some rallies to reduce some size and then see what we think from there. Because as I said, the next week or two, you might have a real huge significance or significant change in the on-chain data. So at this point in time, you just don't know. There was a lot of the selling into December. You might start seeing the funds start repositioning themselves in January, because they might start looking at this and like it. So who knows? We're not sure just yet. We have to play the information we have. And that's basically what we have. But for now, I filled orders in the yellow box for Ethereum. It's the only one I'm playing as like a trade in the futures. Everything else I'm not really interested in. I'm more interested in looking for a price rebound and then looking for things I can add to shorts. So Litecoin is really ugly on the daily chart. It's just at lows. It's just not really done anything. It can't get any momentum. But yeah, can it go lower? Yeah, it can do. I think the next area would be somewhere. If it can't hold 119, it will probably go to 103. But I do think a lot of these alts, we have to see some form of rebound first. But it shows you the lack of liquidity that we just can't get these big enough rebounds. But yeah, that's where we're at this moment in time. Hopefully, we'll start seeing some liquidity come in, and we ought to be, because we'd like to think there are some institutions that like the prices we're at now and want to get back in. And there's nothing stopping us flipping into a new bull run again. But at this moment in time, we don't have the environment to do that with regards to the institutions just not being in the market. But for now, Solana is one I quite like for potentially shorting. I think we could see it go to the orange box. I would want to fill at like the 160s and then see it break the yellow line. Again, hopefully we'll get a close inside. Slight move up. Fill the shorts in here. Have a breakdown, and we can start closing there. And I'll try and pick out one or two alts to be the main thing that I use as the hedge against the rest of my portfolio. So that short should be making up enough money that whatever value I lose in my portfolio, I am making up the majority of in the short. Let's look at BNB. Because I'll be honest with you guys, I don't think we go into... I think those days are done where you go into this like mad year and a half bear market where we lose 90% of the value. Don't get me wrong, a lot of this shit is going to go to 90%. Like, sorry, not this stuff here. But ones like Rose might do, or Tomo might do. You know, the ones that just aren't really that, you know, hugely relevant. There's something like a Matic is not going to go back down to 20 cent. Like, it's just not going to go that low. You might, if you went into like a 6 to 9 month bear market, you might get a processor where it comes down all the way down to like, say here, what's that, 45 cent. You might find support here, but you could even find support this high at 60. But I mean, this is like really terrible. This isn't going to be something where I don't think we even go that low. I really don't. And as I said, there's no guarantee we're actually going to go into a bear market. I'm just sort of preparing you for if the absolute worst did happen. But I think with people wanting to get involved in crypto and the institution wanting to get involved, I think Bitcoin just doesn't break 30. I really don't think it does. I said I don't think it would break 40, assuming if the on-chain stuff changed, but it hasn't. But yeah, I don't think it breaks 30 because I just think at 30 buyers will come in. The Fed landscape, so the environment they've laid out with regards to the rate hikes and the selling of the mortgage-backed securities and the blah blah blah, the other things, the treasuries, that will that doesn't lay out a good environment. But it doesn't mean we're going to go into some like ridiculous bear market. But as I said, let's see how we go with all that sort of stuff. But for now, we're just playing the boxes. We seem to, so let's zoom in a bit. The yellow box always gives a bounce. The first time it moves in there, you always get a bounce pretty much. But the feeling the second time is not good unless you get a bull div. But here I don't think we're going to get. We might get on a smaller time frame. The 12 hour. See, the 12 hour we could get a bull div, which might be nice for us to go up and out. But we might create a bear flag. This is just on Matic. This is what I mean. I don't really want to be shorting just yet. I need more like confirmation signs. So yeah, you might get a move into the bear flag. I'll measure an orange box. There might be one like there, and then you get a move down further. But again, who knows? There's no guarantees we're going into this bear market. Let's look at Polkadot. Polkadot's been absolutely battered, unfortunately. So you might find some support here and get a relief rally up to like 40 odd. You know, it really depends on what's going to happen. But again, you could just like completely keep breaking down. Like from here, you do bear flag, move down, bear flag, move down, uptrend channel, move down, bear flag, move down. There's only so low it can go. Like when you've got a project like Polkadot, there comes a point where sort of rationale takes over and people look at it and go, $23 for Polkadot, I'll take it. But yeah, for now, ugly chart. I'm not looking to trade it. Chainlink has held up really well. It sort of saved my whole portfolio, to be honest, because it's probably one of my biggest bags. And we were adding a lot. I think in the 1920s, we took profits like in here when it had this little crash. and it's gone up this high. So it's not doing too badly. I'm not looking for positions right now. I want to start seeing what's going to happen with the market and how things are laid out. I've got a question. Don't you think they would all go 90% more down if we get something like 2008 financial crisis? The 2008 financial crisis um, was like unexpected. Like people didn't know about it. With this, it's set in stone. Everyone knows what's going to happen over the next year in terms of like how the S&P will go down for sure. Um, it may not though, because people might look at equities to say, look, I want to be risk on there. I would say it's going to go down, and people will look at, or asset managers will look at other ways in which they can, beat that inflation 7%. But I think the S&P will go down. I'm not sure if crypto will be the answer. I don't think it's obviously not going to be the answer for everything, but it might be. Some of the more risk-on managers might look to crypto to try and make up some of those gains, even if it's a case of shorting crypto. So we might end up moving that way. But for now, we need to get a confirmation on the on-chain stuff, because we want to see that lows are put in, like really low lows, and the on-chain still doesn't change. As of the time we're getting those lows, and the on-chain isn't changing. So that is why I'm now starting to think, I should, on the price rebounds, I should start going short rather than look for the longs. And as I always say, never trade against the trend. So, but look, let's see. AVAX, still within its like massive wedge. You could try and buy it to maybe get a move into here. That could be a possible trade if you trust this trend line to hold up enough. But yeah, I'm not looking for any active trades right now. If we went up to here, I'd consider shorting. If Luna wasn't right next to its yellow box, see, it hasn't filled the order. If it wasn't right next to its yellow box, I'd consider shorting. Like if it was more higher, because it's just gone up so much, I'd consider shorting. Curve is one I was considering short, but it's one of my big bags, so I feel like obliged not to short it. Again, still not. You see, the strong ones just don't even fill the yellow boxes. But yeah, not looking for any new positions in there. Let's look at Phantom. Phantom's probably the coin that's most on my radar. Too short. I don't like the RSI. I don't like that it's only at 55. It's held up really well as well. There's nothing stopping it going up to sort of 3.5 again, like up to 3.5 and meeting this all-time high, creating a bit of a bear div on this time frame. So we might get a move up to say here, create the bear div up to like there, and then that's where I'd be looking for a short on Phantom. And Phantom, even though I love the project and I hold a bag of it, I've actually sold some of my bag into the threes, but in terms of trading, that might be the best opportunity that we have to place that short that basically hedges against our portfolio. Sand done an orange box and moved down, not interested. We did get a fill here, but sort of nothing. It might be worth adding just an order on the bottom hand of the box to see if you get a relief bounce, but for now I'm not interested. Mana, it's done that fill, move up again. But I mean, play the boxes once. That's I only usually play them once. I never play them more than after the first fill, unless like Sand, you got that slight fill here. Then I'd maybe consider getting, because orders are left in this box basically. So that's where I'd go with it. Look at Mina. ENS there's no chart info really. Really weird chart. It doesn't trade that well with the boxes. It doesn't really work. You got this mad wick in and then a close up there. So that was a nice trade if you played it. But I'm not interested in trading this. I hold this, and this is one of my good sized bags. I will continue to hold this, even if I do think we're in a bear market, because I like the project. But yeah, this I'm not interested in selling the bag I have. Let's look at Tezos. So we were in this downtrend. We then held this uptrend. We got the breakout, which is where we bought. We then sold, I think, at a break even because you had this mad crash. Let's now start looking for this to find some support, get above the red trend line, hold it, and then maybe look for a new high. But this one has held up okay, not disastrously. It's only down about 10-15%, and Bitcoin is down about the same. So it's not, from this sort of era. So it's not actually done too badly, like holding up wise. Compound is absolutely killing me at this moment in time. It's broken out twice of the red downtrend line. We've been on the move. We lost this trade here, and this trade we made money. But it's just one of those ones that's just really painful, and like its all-time high was 900 back in the summer. So, and it just looks so low. So I have a bag of compound as well, and like there's nothing that convinced. I've sold sort of, I think, a third of my bag into this here, just in case we do go down to like this kind of level of 150. But I don't want to sell at these prices. I really don't want to sell at these prices. So I'm more inclined just to hold on to what I have rather than look for sales, because like all these projects are good projects. I'd rather just say, you know what, I'll lose value over the next six. If we do go into the bear market, I'd say, look, we are going to lose. If we do bear market, then we might lose some value over the next 6 months. Am I willing to hold through that? Yeah, I am. So not a problem. I'd rather not book the loss, if that makes sense. I'm under no pressure from investors or anything like that. So, I'm happy just to hold these. So we've got Sushi. So Sushi, I did the post the other day for the 2K challenge saying we were selling into the 10s. Like, the rally was ridiculous. So I think we sold into the 10s. So we pretty much called it spot on. But the exhaustion here on the RSI was ridiculous. So that's why we sold it all, basically. And, we're pretty much back down to where we were at. So we sold at 10, we're now at 670. And I think we bought in this breakout. So somewhere in the mid 10s. So I think we might have lost maybe 3 or 4%. And considering at one point we were down about 50%, it's not too bad considering we've been battered by the market over the last month or two. We've managed to sort of like hold up reasonably well. DAG is still holding up really nicely, actually. It's still something I'm holding for the long term. Like, I'm happy to hold it for the long term. Yeah, I'm not selling my DAG bag either. Okay, Atom, I'm considering shorting. I know some of you have asked me about Atom. It's the one I like the most for a short so far. It can't seem to break above these highs. It's tried a few times. I think this is the one I'm considering. If everything rebounds, this could punish us. So I am wary of short at this moment in time, because we haven't had enough confirmation signs. But the chances are I will be trying to find a short in here, because the RSI is closed with a bear div. A higher high on the price, a lower high in the RSI. The only concern is the RSI is not hugely high. I mean, it's at 63, does that say? And it was at 70 odd. So it's worth the punt, perhaps. It's perhaps worth the punt of doing a short that will recover some value that you may lose in your sort of hodling portfolio. So for all those that were excited about Atom, sorry if I've sort of rained on your parade a bit there. I'll look at NEAR. This one I'm scared to short. It's created a big bear div, but I'm just scared to short this one. I don't know why. I feel because it can just do like mad shit like this. I mean, that was pretty, yeah. You stay away from these coins that aren't that liquid, because when the liquidity is not huge, it doesn't take much liquidity to actually come in and smash the price right up. So for that reason, I'm not looking to short this one. Yeah, even Atom, the sort of structure of Atom does worry me slightly as well, but it just seems to be the best opportunity, along with Solana doesn't just have a good charting for shorting, but it's also just gone up so much. So there's a chance it could come down to like a 60 odd level. So I may consider doing a short on Solana, just because I feel like there's a lot of liquidity there as well, and the institutions and the funds will, that will come up on their radar to think about shorting, where Atom and NEAR probably won't. So I'd rather be, on the big boy side than trying to go against the crowd, if that makes sense. Someone asked me for Harmony. Had a breakout, had this sort of long uptrend, broke below, filled the box, and came above nicely. Nothing really interests me here. I don't think I'd be looking for longs or shorts. Yeah, just not really that interesting for me. If you're holding it, I would say maybe de-risk slightly. But if you're happy to hold, I mean, if you guys are playing everything on leverage, I would say you should be selling that, putting it back into spot, and playing things in the spot market, and borrowing when things go really low. So borrowing USDT when things go really low. Rather, you need to stay alive in the game. And I mean, I've been there in 2017, 2018. I've seen my portfolio do a 10x, and I've seen myself lose 90% as well. I mean, that's where I was 3, 4 years ago. So I would say, don't be scared to take profits. Don't be scared to sell all out, because we might have a relief rally and you'll be sat on the sides and be all pissed off with yourself because you've sold everything and you're not profiting from it. So I would say just go to a level where you're comfortable and say, if my portfolio goes down by 30, 40, 50%, can I handle it? The answer is no, de-risk. The answer is yes, say okay, leave some money on the side, so some USDT on the side, and use that for potential some bigger leverage trades that are one-off trades, that are one-off opportunities, like a Solana short, for instance. I mean, I'm not doing it right now. I'm waiting for it to hopefully do some form of relief rally, and then I might use that to short, assuming the on-chain data does not change and improve. At this moment in time, it's possible that the on-chain data may improve, but we'll have to see what we think is going to happen. And yeah, there's not really much to it other than that. It has been this last few months has been brutal. Like from beginning of November, you've just had these moves down. There's been at no point like up days where you could have made money, where we've just had this sort of uptrend channel, down move, uptrend channel, down move, slight up move here, crash. Then you had sideways action, this was a bull trap here for sure. It was very difficult to read as well. This breakdown of this bar-like pattern here was the reason that you should then be like, shit, this is not going to plan, and that's why we de-risked there. And then also when you had this action here, it was holding the level quite well, but at some point it's going to break. So I'm at a comfortable position with my portfolio now. If any of you guys need help, like message in the pro chat. I'll let you guys know what my thoughts are. I hope this stream has taught you enough and shown you the sort of environment that the Fed has laid out for the upcoming months, and why perhaps institutions are not flooding in right now. I think there's still potential that they will flood in over the next 6 weeks or so. I think we'll have our answer by sort of the end of January, so in the next like 3 or 4 weeks. But let's see how we go. At this moment in time, it's not a great time to be in crypto, but this is where you become much, much better at managing a portfolio and managing your money and managing where to basically put your money and know how to do it. So I would say de-risk yourself definitely, and then we can go from there. But for now, everything is okay. I think, yeah, I think everything is okay. We'll have to see how things go. And if we do get a bear market, I don't think it will be a bear market either. I think it will just be this range-bound price action for ages. So between like 30k and maybe 45k, could be something like that. And then it will wait for the economic environment outside of crypto, so the Fed and stuff. How I think it will wait for that to slightly improve. But if we do have a big recession on the outside world, then crypto may be the thing that people either try and flock to, or it may just take the biggest pounding of them all. But it's really hard to know right now because the environment is changing all the time. So as I said, just if you haven't de-risked already, I would say maybe try and wait for some form of relief rally if we can get it. I'd say de-risk slightly now, de-risk again into the relief rally, And then I'd say just keep paying attention to everything, and hopefully we'll start seeing some of the on-chain data change over the next maybe 3 or 4 weeks. Yeah, and we can basically go from there. But I hope this has been helpful. Any questions, hit me up in the chat. Yeah, we'll go from there. Cheers, everyone.